Imagine this: Bitcoin shattering its predictable 4-year boom and bust pattern, entering a prolonged era of sustained growth that could redefine wealth creation for generations. What if 2026 isn't just another year in crypto, it's the dawn of a supercycle that changes everything? Welcome to the generational wealth community, your pathway from knowledge to legacy. We don't chase hype, we decode the market. Today, we're diving deep into one of the hottest debates in crypto: the potential for a supercycle in 2026. If you're building generational wealth through smart, informed decisions in this space, understanding this concept could be a game changer. We'll break down what a supercycle means, why experts are buzzing about it, the bullish and bearish arguments, and what fresh data from early March 2026 tells us. Stick around, because by the end, you'll have the insights to position yourself wisely. First, let's clarify what a crypto supercycle actually is. Traditionally, Bitcoin and the broader market have followed a 4-year cycle tied to the halving events, where the reward for mining new blocks gets cut in half, reducing supply and often sparking bull runs. We've seen this play out repeatedly: peaks in 2017, 2021, and 2025, followed by sharp corrections in bear markets. The supercycle, on the other hand, suggests breaking free from this rhythm. It implies a longer, more sustained bull phase with shallower dips, driven by structural shifts like massive institutional adoption, regulatory tailwinds, and real-world integrations that keep demand pouring in steadily, rather than in volatile waves. Why is 2026 ground zero for this talk? It all traces back to the 2024 halving, which historically sets the stage for a bull run peaking roughly 12 to 18 months later, putting the high around late 2025, as we saw with Bitcoin reaching over $126,000 in October. In past cycles, that peak has often led to a significant correction or crypto winter unfolding through the following year, but many analysts argue we're evolving beyond that. Take Changpeng Zhao, or CZ, the founder of Binance. In January 2026, during an interview at the World Economic Forum in Davos, he expressed strong confidence that 2026 would mark a Bitcoin supercycle, potentially ending the 4-year trend. He cited pro-crypto policies in the US and global adoption as key drivers, making prices easier to predict higher over 5 to 10 years. However, CZ later tempered his enthusiasm in a February AMA, admitting growing FUD, or fear, uncertainty, and doubt, made him less sure, emphasizing Bitcoin's sensitivity to macro factors. On the bullish side, Wall Street voices are amplifying the hype. Tom Lee from Fundstrat, speaking at Binance Blockchain Week in December 2025, declared the supercycle intact, forecasting Bitcoin at $300,000 and Ethereum at $20,000 by 2026. He highlighted real-world asset tokenization and Ethereum's shift to financial infrastructure as catalysts. Similarly, Bernstein analysts in January 2026 predicted a tokenization supercycle spanning stablecoins, capital markets, and prediction markets, reiterating a $150,000 Bitcoin target for 2026 and $200,000 as the cycle peak in 2027. They see market dips as buying opportunities for crypto stocks like Coinbase and Robinhood. Fidelity and VanEck have also weighed in. In their 2026 outlooks, Fidelity's Parth Gargava suggested Bitcoin might be entering a supercycle with prolonged highs and shallower dips, driven by steady ETF inflows, pro-crypto policies, and market maturation decoupling from traditional assets like the S&P 500. VanEck echoes this, debating whether the 4-year cycle is over in favor of a steady supercycle. Even Grayscale's recent report on the dawn of the institutional era aligns, predicting mature momentum that could retire the old cycles, with Tom Lee reiterating a $200,000 to $250,000 Bitcoin target for 2026, implying over 165% upside from current levels, but not everyone's convinced. The supercycle narrative faced pushback as early as February 2026. Crypto analyst Crypto Andy noted it's losing traction, with markets reverting to the classic 4-year framework tied to halvings. Skeptics point to fading institutional hype and potential macro headwinds. Prominent trader Ali Martinez, in a January post, sarcastically dismissed the buzz, predicting a $31,800 Bitcoin bottom in 2026. a nearly 65% drop from then current prices, highlighting risks of further declines. Other analysts warn of a cycle low between $40,000 and $55,000. Consistent with patterns from 2024. Looking at real-time sentiment from X in early March 2026, the conversation is mixed but optimistic. Users like CryptoThanos are asking if diamond hands are ready for the actual supercycle, while Vivid BNB senses a beautiful crypto aura returning, calling for a supercycle in tokens like Lunk. Discussions around AI agents on chains like Tron suggest the next supercycle could be defined by protocol evolutions, not just price pumps. Meme coin enthusiasts are positioning for explosions, with posts declaring supercycle leadership to the moon. And as of March 4th, Fidelity reiterated Bitcoin's potential supercycle entry, with the asset trading at $92,182 amid a market rebound. The overall crypto market cap is up 6.63% to $2.49 trillion in the last 24 hours. Fueled by institutional confidence and rotations into AI and memes. So, is 2026 the supercycle year? The data shows a tug-of-war, bullish on institutional flows and policy, bearish on historical patterns and volatility. For generational wealth builders, this means diversifying. Staying informed and not betting the farm on any one prediction. Focus on fundamentals like adoption metrics and ETF inflows, which could sustain higher floors even in dips. Subscribe for daily recaps, drop a comment on your biggest takeaway, and turn on notifications. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.